Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Hope everybody's having a fantastic evening. Hopefully your trading's been going well. We absolutely crushed it this morning in so many ways, and last night, just amazing. We had a great bankers close trade. We had some great overnight trades and trades that led into this morning that were just fantastic. And we talked a lot about that this morning in that webinar. So that might be good to go back and watch that in the recording. Super awesome and so fun to see you guys there and to participate in the abundance that's available for everybody, right? Super awesome. I want to give a shout out to everybody live with us today and also those in the recording. Just want to say hello to you guys and welcome you guys to participate in any way that you can in this webinar. But I'm excited because we have a lot of fun stuff to talk about today in terms of the COT report. I've done some back testing on the COT report that I think you guys are really going to like, that I've prepared for you today. And then, yeah, the other thing I'd like to do tonight is see if we can find some more overnight trades. There are several news events coming out tonight that we'll talk about and that lead into in the morning. We'll talk about how to navigate some of those things, but nonetheless, I think we're going to get some good trades out of this. So without further ado, let's go ahead and jump into this. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. Okay, awesome, guys. So let's do this. Let me pull up the COT report right here. And let me jump into, let's make a new week, which by the way, when you're in the COT report, make sure you click on the dealer tab right here down below, which I really need to change this. I need to call this something different, but it's fine. And we're going to start a new week. Trading this week has been, the COT report has been basically the same. I'm just going through the process with you guys again here. Okay, that is being really funny over here. What happened? There we go. Okay, and let me go ahead and delete these. And let's unhighlight these. Most of you know what the COT report is, but I'm going to go over it real quick. So the COT report, as I'm pulling it up over here, is data that's released by the government, CFTC, Commodities Futures Trading Commission, and you go to cftc.gov, and then you go to their market data and economic analysis tab, and you go down to commitment of traders, which is also the acronym for COT. And there's a lot of different COT reports, but the one we look at is this financial traders in the financial futures market, and we look at the long format. Basically what it is it tells you where the larger banks in this country that are registered with the CFTC, where do they have the positions? How many outstanding long positions do they have on the euro? How many outstanding short positions do they have? And on so many other things. And we just focus on the Forex side of things, but you could look at things like cattle, you could look at coffee beans, you could look at copper, gold, silver, things like that. All of that's in here because it's the Commodities Futures Trading Commission. So all of that's in here, which is really awesome. And naturally, it's very valuable information because when you get a bird's eye view at what the banks are doing generally, it's very helpful in terms of taking a longer term trade, a trade that you could hold for several weeks, maybe several months at a time to create an income, or like an aggressive investing strategy. So I'm not necessarily teaching a strategy with this tonight, but rather giving you insight on something that you could use to make a strategy a little more passive to long term, is how you would use the COT report. And it also helps in terms of maybe picking a direction on the shorter term timeframes. But again, I do want to emphasize that I don't want you to use the COT report to decide what you're going to trade every single day in terms of, hey, if the pound is a buy, I should buy the pound every single day. Not necessarily. You got to do your own due diligence and make sure it fits with the other strategy that you're trading as well. But I do know a lot of people that use this COT report, and a lot of different companies I didn't even know about, who base their entire companies just based off of COT report trading. Pretty cool. Um, and the more I discover, the more awesome it is. And we've been doing a pretty good job with it ourselves. We have our own spreadsheet. We, take a look at it every week. And yes, it does help us determine, general holdings and what direction we should go. So it's a super nice little thing. But it's kind of a lot of information here. We just basically break it down into a couple of categories. There's the dealer side, the asset manager side, and the leveraged fund side. We've been focusing mainly on the leverage fund side. I used to focus mainly on the dealer side, but I made a switch to the leverage side. I talked to some traders who are friends of mine out in Georgia who run a pretty big trading company out there. And they actually built an indicator, a tool that uses the COT report, and they're extracting data just from the leveraged side. And they explained why they did that. And I explained why I did my side too. And ultimately, I decided to focus on the leverage side because after further research and after I did my own due diligence on this, the leveraged funds category of the COT report looks at institutions, representatives at institutions who take outright positions, keyword outright. These are positions that are designed to take advantage and speculate on the market. And we do want to follow those professional speculators because normally they're right. In the long term, normally they're going to be right. And so we do want to follow them versus, say, the retail trader space. Dealer side has more to do with people who sell securities, people who sell currencies onto the marketplace. So it's not the best representation, although these are professionals, it's not the best representation for our type of trading. Asset manager, this is another, you could look at this side. The downside to looking at this side, though, is that these are people who often are hedging the market. So sometimes they're taking outright positions in the opposite direction of where the market's probably going to go. And they actually use currencies as a form of hedging a lot of their securities that they've purchased. So these aren't necessarily the best people to follow either. So we're much more aligned with the leveraged funds folks, and that's what we've been monitoring recently. And I've done a lot of back testing with this site, and I think you guys are going to like what I found, and I'll show that to you tonight. But what we need to do is find first currency up in the list. When I'm looking at the COT report, I'm looking at the Aussie first, then the Euro, pound, and so on. So I'm going to pull up the Aussie, and all I do is I just search the ticker for the Aussie, which is AUD, and here it is. And all I'm looking at is the long side and short side of the leverage category. So right here, you can see there are 13,809 contracts long on the Aussie, and I just come over here and plug that into the spreadsheet. And then I come back over here and I see, okay, there's 48,789 contracts short, 48,789. And then I'm done with the Aussie. And then the rest of the spreadsheet just is kind of a derivative of whatever we insert over here. So this is kind of nice. But so you can see what percent is short, what percent is long. Obviously, right now, some of these larger institutions have a bias to sell the Aussie. And they've been doing very well. If you actually back test the Aussie over the last several weeks, the Aussie has been in a quite the free fall. Have there been days where the Aussie's gone up? Oh yeah, 100%, absolutely. But yeah, overall, Aussie's been down, and I'm not surprised, right? So now we go and look at the Euro, and we just type EUR. And we come over here, you can see the leveraged fund side. You got 76,694, 76,694 on the long side. A lot of people trade the Euro. A lot of banks have the Euro. And then you got 81,601, 81,601, and then the Euro's done. And then we move on to the pound. And again, I just search the pound and do this. I have a few people that know how to get this to set up automatically. They had it on the dealer side. They just haven't done it for the leverage side. I'm sure it's a simple thing to do, but I just need to get in contact with some of my friends that know how to do that kind of stuff, the programming and all that kind of stuff. Okay, so I got 55,649 on the pound long side, 55,649. 55,649, and then on the short side, I have 52,473. 52,3. Okay, and then we pull up the Kiwi is next, and you can see I've got 12,083. 1283, and then 21,077. All right, and then I pull up the CAD, and I got 26,001. And then on the short side, we have 26,399. All right, and then I do the franc. Here it is, it's right here. And I've got 1439. There's not as many contracts on the franc, which is fine, but just pointing that out, 10,000. Which is why when I program this, just real quickly, I'm pretty proud that I did this, but when I put this spreadsheet together, I realized that not as many people trade this, but nonetheless, I need to be able to proportionally figure out the difference between these two numbers. And so it's still being represented as a percentage of the outstanding positions, long and short, not just simply on the amount of positions long and short. So I thought that was kind of cool. So I've got 10,859. 10,859. And that guy, that is still very, very short. And then you got the yen. Okay. 23,827. And then on the short side, we have 56,261 contracts. what did I say? 56,261. All right, and then we just got to get the dollar. Which is at 14,562. And then on the short side, 11,088. Perfect. All right. And so now what we're doing is this is the fun part. This is the part for me where it's kind of fun, where we kind of get to figure out and dissect what this information is trying to tell us, because all this information is pretty boring, right? Like there's just so many numbers, and what do you focus on? And there's a lot of stuff we're not even using. We've just kind of come through the stuff that we believe is going to be most helpful. And then once I've gotten this information and I've got it inserted in here, like I said, I now know the percent long, the percent short on every single pair, the sum of total positions, the change in long positions, the change in short positions, the net change weekly, and as a percentage, the net change, which is really, really cool. So all of this information can be very helpful. However, what I have found to be the most helpful piece of information in terms of picking a direction over the next several weeks, or even months, is knowing the long versus the short, the percent long versus percent short. Because what we want to do is we want to take the weakest currencies and pin them against the strongest currencies and take an outright position based off of the information that we're given here. So if we look at the long side, let's find the top 2 or 3 most bought currencies. Well, the biggest one I would say right now is the dollar, as the most bought currency at the moment. And that makes sense. We're starting to see the dollar come back up again today with the interest rate hike again that sent the dollar up after a move down from the CPI data. But it's still very high. Like if you look at the Dixie, the dollar has just been on a tear to the upside for a long time, and it makes sense. It makes sense that people are bullish on the dollar at the moment. Um, there's a lot of data backing that up. And then you've got the pound, which is also very bullish. Not when I say very bullish, there really isn't anything else that's bullish. So it's just the pair. These are just the two currencies that happen to be a little bit stronger than their counterparts, right? Because every currency out there, generally speaking, is pretty weak right now. So it's kind of this battle of who's the worst, right? And we're trying to take the least worst currencies and pin them against the absolute worst currencies right now. So the currencies that have been taking a beating recently are the franc, right? Franc's been taking a huge beating, so we'll highlight that guy. Another one that's been taking a beating would be the yen. The yen's been taking a big beating. And then you've got the Aussie, like we pointed that guy out. We'll do the top three bearish currencies. And then there's other ones that are bearish too. Like you can see the Kiwi still pretty bearish, 63% short. But these are the three that I would say, each one of these is at least 70% biased one way to the short side. And that franc is very short, 88% short. That's a strong bias, right? So now what we do, now that we have this information, and honestly, it looks pretty much the same from the previous week. The only thing that's changed is some placing. So we'll trade a lot of the same currency pairs. So I can pull this up for this week. But there's been a little bit of a change in terms of who's the number one currency. So right now, the strongest currency is the dollar, and the weakest would be the franc. So technically, buying the USD franc would be the best trade to take as of this week. And that's the first time that we've seen a switch in many weeks, guys, which is kind of a big deal. Now that the USD franc is long, and then the pound franc was basically the long guy for 1, 2, 3 weeks in a row. And I'm certain that that will still be a great trade to take. It'll still place, just not at the number one slot. So I'm going to go ahead and remove that guy because the number one slot is the USD/CHF long position. Okay. At least for this week. And then you have the pound Aussie as of last week. Let's see what's next though. So what I like to do is I take the number one currency long, pin it against the most weak, which was the USD franc. Okay, so who's next? Probably USD versus the Aussie, right? So that would be Aussie dollar, right? And that would be a short, not a long, right? Why would that be a short? Because we want to sell the base currency, which in this case is the Aussie. So we want to short it. And then we're subsequently buying the quote currency, which in this case is the dollar. And so that's basically, if you short the Aussie dollar, that's like buying US dollars and selling Aussies. Okay. That would be the next best trade to take based off of the info that we have here, which is interesting because the Aussie dollar was in 5th place a week ago. This week, it's now in 2nd place, which I think, again, is interesting. Okay, who's in 3rd place? Just take the dollar. What's the next guy? The yen. So we have the dollar yen long position as 1st place. And that is up from 6th place a week ago. So it went from 6th to 3rd. Okay, who comes in at 4th? Now we're going to take the pound, pin that against the worst currency, which would be the franc. So we have the pound franc coming in 4th. And that would be it's dropped from 1st place to 4th place, which, by the way, I don't want that to sound like a really bad thing, because if you think about it, there's 28 major currency pairs out there, 28 majors. And this just went from 1st place to 4th place, technically out of 28 different pairs. So it's still not a huge drop, but it is something to observe, right? Okay, so pound franc. Okay, who comes in 5th place? We have the pound against the next guy up, so pound Aussie, and this would be a buy. So long position, and that went from second place to fifth place. And then the last one, we have the pound against the yen. So pound yen long position. And that's from, it went from third place to sixth place. Okay. So, and that's the new lineup for this week, which is fun. So this would be what you would be looking for. And if you're a scalp trader, I think a good routine to do in the mornings, in addition to, we have this really good routine of looking at news in the morning. I think it's been huge, right? Obviously, when we're trading that banker's close trade, if we can find a pair, like we have our three pairs that we like for the banker's close, right? The euro pound, euro franc, pound franc. I think it's awesome that we've narrowed it down to three pairs, that we've just gotten really proficient at trading every morning, right? For that banker's close. Guys, the last time I had a losing day on the banker's close, I think was the second Thursday in October. I haven't had a losing banker's close. I've had losing trades in the day on the banker's close, but overall, the sum of all the trades that were taken on the banker's close have wounded up profitable by the end of the day. There were some circumstances where you had to hang on for like 6 hours, maybe 8 hours past the banker's close hour, but we still wound it up profitable. I guess if you exclude those and count those as losses, which I hate to do because they did win, but yeah, I guess we've had some other more difficult days with the banker's close. But the last day I actually lost money, like actually took a loss for the day, wasn't until early October on the banker's close. Anyway, so the reason why I bring that up, I guess I was just going on a tangent about having a routine, right? We have our routine of checking news in the morning. And if we trade a currency pair at the banker's close that does not have news within the last 12 hours or coming in the next 12 hours, it keeps us super safe. The chance of success just increases substantially. Whereas if you do have something that had news recently, sometimes that can cause the market to go in a direction that maybe isn't favorable to the trade setup. I think another good thing to put in your routine, either weekly or daily, would be checking the top 6 pairs here to see if there's opportunities in those directions. If you find a nice order block nearby on one of these pairs, like if the pound yen comes into a buy order block, you may want to consider purchasing that pair. Same thing with dollar franc or any of these others, right? Some good things to look at. All right, guys. So I want to show you a couple of things real quick. I've been doing some back testing, and let me explain how I did this back testing. So I went back and looked at the top 6 pairs every week for the last, let's see, I started one. This is back in October 11th. So from October 11th until now, I back tested how would the top 6 every week pan out. And most weeks, it's pretty good. Like last week, if you took every single one of these pairs starting Sunday night or early Monday morning, by the end of the week on Friday, this is what you would have had. So on the pound franc, you actually would have lost 69 pips last week. But on the pound Aussie, you would have made 14. You would have crushed it on the pound yen. You would have made 208 pips. And then if you look at the USD franc, minus 10, plus 41 on the Aussie, and then a big trade on the dollar yen long. And again, this is holding from basically the start of the week. You get your signal and you hold it to the end of the week. Just a simple little, I don't know if you'd call it a strategy, but it is a method of trading. It's just basically saying, hey, I know what the top COT report trade is of the week, and I'm just going to have full exposure to the market all week long. That's what we're saying with this here. So last week, you would have made 410 pips just by doing that and holding the whole week. The week before, you would have made 961 pips. Every single trade would have made money. Your biggest trade would have been on the pound CAD. Again, this is saying you get the new COT report on that Friday. On Sunday or Monday, you execute just a single long position on the pound CAD. And by Friday, it would be worth approximately 366 pips. That's all we're saying. So the results have been good so far. Like there have been some losing weeks, and I do want to illustrate one very particular losing week that was not good, just so that you're aware. And I know another good week. So I guess we're on so far 1, 2, 3 weeks in a row with profits. This is another good week. 4 weeks in a row. This was a banger week right here on the first week of November. Each one of these would have done so well. You would have made over 1,000 pips from holding on Sunday or Monday until Friday. Just fantastic wins here. 1,031 pips. But then look at, oh, and then another win here. This is, I guess, the first week of November technically here, and this was the second. So now we're on a 1, 2, 3, 4, 5-week winning streak with very few losers, but the whole weeks were profitable. But check this out. This was a terrible week right here. I'm not sure what caused it. And obviously, it would be worth having a stop loss on something like this. Like, look at this trade. This lost 520 pips if you were to have bought the pound Aussie at the start of the 25th of October, or the week of when this COT report was released. If you had bought the pound Aussie that week on Sunday or Monday and held it till Friday, and had no stop loss, no take profit, you would be down 520 pips. So, I think there's some tweaking to do and some things to be considered. I'm not sure why. Maybe there was some kind of news or something like that reversed from the overall direction. But this was probably the worst out of the 8 or 9, 10 weeks that I back tested. This was the anomaly. And so I do want to make it clear that this stuff can happen. So should we have a stop loss? Yes. I don't know if, because the back testing I did was just flat out like no stop loss. Um, the back testing I did was like no stop loss, no take profit, just pure raw trade, hold it until the end of the week type of thing. So Lee, technically the back testing that I did was basically I start Sunday and then I either close or start anew on Friday, or excuse me, on the next Sunday. So you'd be holding all through Friday with the back testing that I did. I guess you could do it a couple of different ways, but with the one that I did, it was Sunday to Sunday, basically just a whole week, full week of exposure. And if the signal was the same going into the next week, because often that happens a lot with a lot of these, you still have the same signal. I still cut the trade and then just re-entered a new trade with the back testing that I did. That's kind of how I did it. That way you could still have a result by the end of the week, like, hey, we booked this profit, or hey, we took this loss. That's what I came up with on this. So it was really just Sunday to Sunday. But as you know, the market's not open on Saturday. So that's why I said earlier Sunday to Friday, because it's like, I'm just saying it's a whole week that I was back testing. All right. So hopefully that answers the question. Yeah. This week was great right here. Nearly as good as the loss, not quite, but this was just terrible, right? And then I did have a loser right here, and that's as far as I've back tested. So basically goes back to the beginning of October. Again, a loser here. If you count all of these losers up and all the winners up, so the net would be 1,937 pips over, what did I say? 1, 2, 3, 4, 5, 6, 7, 8 weeks. So 8 weeks with 2 months of trading. It's like 1,000 pips a month. So it's obviously working. And then I'm just curious, I know we're not at the end of the week, and I'll delete this because I know we're not there yet, but I wanted to just see real quick, how would this week pan out being midway through the week. I will delete this as soon as I'm done doing it, but I am just curious to see how this week would have done. So, hang on with me for a second. Let's go ahead and back test this. Let's do start of the week, which would be what day was Sunday, I guess. Sunday was the 11th, right? So if we go to the 11th, here it is, right there. That's the beginning of the week right there. Okay. And let's go to all these pairs. So we know the USD franc long was a trade. And so right now we'd be down on this because you'd start right here and you'd be down 66 pips on this right now. So I'm going to mark minus 66. And then Aussie dollar short, let's see how that one would fare right now. You'd be down on this one too, not as much though. You'd be down 42, minus 42. And this week's not over, but I still have to be objective about this. And, you know, I'm just curious. Dollar yen long, this, yeah, you'd be down definitely on this guy. You'd be down, at this point, you'd be down like 93 pips. And I'm just plugging these in as we go. Pound franc long, let's see, where's that guy at the moment? You'd actually be up on this one, which is good, right? You'd be up 40, yeah, we'll say 41 pips, up 41. Okay, and then we have pound Aussie long. How would that play out? You'd be up so far on this one, you'd be up 94 pips on the pound. At one point, you'd be up 200 pips, right? But yeah, you'd be up 90, yeah, 92, we'll say 93 pips you'd be up right now. And then the pound yen long is another one. And you'd be up 61 pips from the start of the week. And again, we're not done, but it is something to be aware of. Okay, so now we pull this over. I'm just curious to see where that puts us. So I'll just equal sum. Let's add up all these. So you'd be break even basically on the week so far. You'd be minus 6 pips for this week. Pretty much the dollar pairs would be the ones hurting you, but the pound and off other pairs, exotics, whatever you want to call them. I don't like to call these exotics. I don't think they're exotics. I think an exotic would be like Indian rupee or Russian ruble or Mexican peso. They're not like it. They're not, I don't know who's the organization that decides who's an exotic and who's not, but at least for me as a trader, I can tell if something is an exotic because if you take a trade on the Mexican peso, I don't know if you guys have ever done that. If you ever take a trade on the Mexican peso, spread's always huge. So I choose not to trade that. I just think we stick with what works, right? And the stuff that has better spreads. But I wouldn't say the GJ, especially pound yen, that's not an exotic. It's very widely traded, that currency pair. I would say pound yen is, outside of the dollar currency pairs, the pound yen is probably the most traded currency pair out there. And pound Aussie stout, a lot of people trade that one. Honestly, people love the pound. I see a lot of people trade the pound all the time. And yeah, spread's not a huge deal when you're trading these. I feel like, especially on a swing trade, it's almost irrelevant. It doesn't matter. Okay, so, but yeah, so you break even on the week. You wouldn't be up a lot. Again, you still have the end of the week to figure that out. Like, obviously we'll recheck this at the end of the week, but I think it's interesting, like you could build a swing trading strategy on this. I mean, think about that. Like in 2 months of trading here, 9 weeks, I guess. So that's about 2 months, maybe a little bit more. You have 1,937 pips total made, including the losses, right? Obviously, some of that's going to be chewed up in spread and not spread at commission, but I don't think all 1,937 pips would be gone in the commission. So there's definitely money to be made with the COT report. It's just tough because I'm not sure what causes weeks like this. This is the kind of stuff that scares me. I look at this and I'm like, okay, why did everything, literally everything, go so far against what the COT report was saying this 1 week, because I can tolerate this, minus 728 pips in a week. That's not favorable. And really, most of it was from like one trade here. The rest were just whatever. And then, you come back the very next week and double that. We'll take that. But this is just hard to swallow. And I think you can still work with that. I just think maybe what you do is, and I'm not exactly sure how to do this or what to do necessarily, but an idea that I have is maybe, well, you guys know I love this website. Go to Maytaf. Here's my idea. Like, find a way to like have a hard stop on some of these trades. Let them ride all week. Maybe not even use a take profit, but have a stop loss though. No take profit, but have a stop loss. Your take profit is close at the end of the week, right? That's your take profit. But otherwise you just let the trade run unless it hits the stop loss type of thing. So it is a strategy idea, and I do really think it would be a good idea to look at. So something that you could do is maybe like sum up each currency. For example, if you're trading, like we lost 520 pips on this week on the pound Aussie. So if we pull up the pound Aussie, maybe do an exercise where, you try to cut that loss in half type of thing. So you're still going to lose, but on that particular week, but how can we cut that loser so it doesn't eat into the profit so much on the following week? We really do, if we take a losing week, the whole idea is to come back the very next week. Like, we don't want to wait 2, 3, 4 weeks to get the money back. If we're going to have a hiccup, let's have a hiccup for 1 week and then be right back in business type of thing. Right. So, you could do something like, you could do something like maybe taking, the biggest day of the week like this, 208 pips, and making that the stop loss type of thing, like a whole daily range, making that stop loss. I could see something like that. You might be able to sum up, maybe take 2 of these and sum them together, like 2. I don't know. I'm just coming up with ideas. Maybe sum up all 5 divided by 5 to get a true weekly average and make that your stop loss. Something like that is what I would probably do, because I don't think it's responsible to trade without a stop loss. I really don't. I've been trading for 10 years, and every single time I try a strategy without a stop loss, I get enchanted by it in the beginning. Like, I get kind of excited. I think, oh, hey, I love the idea of not losing very often. I mean, I think we all do. But then it always burns you in the end. I always divorce those strategies every single time at some point. So no matter what, you have to have some type of level of risk factored into your trade. You must have a stop loss. If you want to treat this like a business, if you want to make money going forward, you just have to. You have to be strategic with your stop losses. Does that mean you have a really tight stop loss every single trade? No, like, definitely give the trade some room. Like, that's an okay thing to do. And everything just matters proportionally to the strategy that you're trading, right? Like, with this type of a strategy, like, I don't think it's a bad idea to have a 200, maybe even a 300 pip stop loss. Like, that's okay. And if you're down 100 pips on the trade, that's okay. Would that be okay on the banker's close to be down 100 pips on it? No, 100% no. That's an absolute no. We cannot afford to be down 100 pips on the banker's close. No, we better stop out before that. And I think I told you guys, I back tested the euro pound, pound franc, and euro franc over 3 months. And the worst drawdown I ever found on both the euro franc and the euro pound was like 40 pips, 30 pips, something like that, before the trade curves back in your favor. And it was very few times. Like, it wasn't very often where I found that. And then with the pound franc, it was a little bigger, just because naturally the pound franc has a bigger stop loss. ATR is bigger. So with that one, I found that the biggest drawdown before you got your curve in your direction was 60 pips. So you just adjust, you figure out, okay, if I'm going to tango with the market 60 pips, okay, how many trades can I afford to take? How big can my lot size be before this thing goes in my favor? These are things you have to factor in. Um, but would a 100 pip stop loss be appropriate on a banker's close trade? Absolutely not. Never, never, ever, ever. But on a week-long trade that's going to last 5 full trading days through news and whatnot, can a 100, 200 pip, maybe even 300 pip stop loss be okay? Yeah, I think so. I think so. But the other reason why I think that's pretty cool is, I probably won't use a take profit on the cut report if I trade the cut report this way, because again, my take profit is a manual close on Friday or Sunday or whatever it is, just end of the week you close type of thing. Let's see, Lee might look at the market shift to the next week. Instance pound was best on the 1025, but I was on a different quote. Oh, okay, I gotcha. Yeah, it's yeah, it's weird. And I think maybe the dealer side, that's probably what you're looking at. The dealer side might have shown a better trading week, but we were looking at leveraged funds for this particular week. And that, on 1025 going into the next week, taking these trades, it would have been an absolute massacre, like blown accounts if you're not careful type of thing. So I just think maybe having a stop loss in here to cut some of these, you're still going to lose on a week like that. But if you can cut maybe this loss down to 1,000 pips, or cut that loss on that week to heck 800 or 900, that's ideal. Like if you can keep it down to an 800 or 900 pip loss, you're looking good, because you'll have all these other weeks of profit where you're just doing great, and all of a sudden you're making, instead of 2,000 pips in 9 weeks, maybe you're making 2,500 or 3,000. And just think about that. Like I was doing the math on this naturally, if every trade you're just taking a mini contract, that's $2,000. Now that only makes you an extra $1,000 a month, but I still think for a lot of folks, I couldn't live on $1,000 a month. But if you had your other incomes and still made an extra $1,000 a month, I think that would be huge for a lot of people. And that's just on a mini contract, just a mini contract, with very low risk, in my opinion. I don't think your risk would be super high, especially if you just continue to trade it week over week, because you will get some really good weeks on a mini contract. Other weeks, or like, let's just say let's say you go big and you go full contract, a full standard contract. You get funded with FTMO or MyForex funds or some other place. You follow the rules, right? Like you close out your trades before the weekend. Some of them require that, some of them don't. Like I know with MyForex funds, if you get funded with them, they let you hold over the weekend. FTMO does not let you hold over the weekend. They don't let you trade through news. Here's the rule with news with FTMO. As far as today's date, obviously it can change. With FTMO, you can trade through news as long as the trade was executed within 3 minutes before the news event was released, and as long as it doesn't close within 3 minutes. So you have like a 6-minute window, 3 minutes before, 3 minutes after, where no buying or selling could be done. Which is another thing to be aware of, because like if you hit your stop loss during a news event, they would suspend your account. So that's something to be aware of. Might be better to just go with like MyForex funds for this type of a strategy, because you can trade through news. You can hold through weekends if you wanted. Anyway, there's places where you can get funding. But all I'm saying is, imagine if you were to take these trades on just a standard contract, passively, just once a week you take them, put those stop losses in, no targets, just leave it to the weekend, and then you close out for whatever it's worth. A standard contract with the 2,000 pips here would make you about approximately $20,000, which I think that's awesome. I mean, that's nearly $10,000 a month, which that's awesome. You would have to be aware though, like you'd have a week like this. If you lost, you could stand to lose nearly, $15,000, $18,000 this week if you did a standard contract, unless you had a tighter stop loss. Like if you could cut some of these losses in half, if you could cut these losses in half, maybe on a week like that, you lose more like $8,000, 9,000, not a pretty week. But the week before that, you'd be making 15,000 here. This week, you'd make just about $1,500. This week, you'd make about $10,000, $5,000 this week. You'd make almost $10,000 that week, another $4,000 this week, and this week you'd be break even. For a grand total of, again, if you cut that bad week in half, you'd probably be looking at a total of $30,000. And anyway, I'm just throwing numbers out there, right? Like the different possibilities. And I'm sure it's something you work up to. I wouldn't recommend just going straight to the standard contract. Maybe start with, if all you can afford is a micro contract, start with a micro contract. That's 10 cents a pip. Or, if you can, go to the micro, not micro, go to the mini and make $1 per pip, or whatever it is that you feel comfortable doing. But yeah, this could be a very passive strategy. If you decided not to trade like the banker's close or do some of our other order blocks type of trading, this could be a big deal. But anyway, I was really happy with my back testing on this, except for this week right here. But I think there's a way to fix that. Not necessarily, you can't make it profitable. You cannot make that week profitable with the normal rules. But yeah, I definitely think there's a way to cut that loss in half, right? And again, I know if I've harped on this, but think about that. Cut that loss in half and keep all of these winners. Golden strategy, just golden strategy right there. And that's why I'm thinking maybe head over to Maytaf. I'm sure you could figure out. My initial inclination would be to either just take the biggest day of the week and make that your stop loss, or maybe take a day and a half, maybe do a day and that might be good actually. So if this is the biggest day of the week, 208 pips, maybe pull up your calculator. Come on, my computer's being slow here. Sorry, guys. Here we go. So you could do, so if the 208 is the biggest day of the week, if that's the biggest daily low or average daily range of the week, just multiply that by 1.5 and make that your stop loss, and that will protect you against, you'll still take a big loser, but it's going to protect you against maybe something anomalistic in the market, which I think that week was. This would protect you from that. Or you could just simply cut it a little tighter and just say, I'm only willing to risk 200 pips, just one daily range for the whole week. You might hit some stop losses a little more often with that one. But I guess the theory is, if the trade's going to work, if you're in the right direction of the banks, they're not going to want to draw down that trade 200 pips, in my opinion, throughout the week. And if they are, let's let them have their way, and let's go and let's wait for the next signal to come on Sunday or Monday and start again. Sometimes, how do I say it? Sometimes I think it's good to let some trades go, right? Not only is it good, it's healthy. Like, let some trades go within the bounds of the strategy. Because I know personally what it's like to marry trades and not stop out, just let the trade just continue to go against you. I've experienced it so many times, to the point where I wanted just to quit trading, just completely just quit, because I've married trades so long. And these are the things that a lot of traders don't talk about. Like, a lot of coaches, they just don't talk about this kind of stuff. They only talk about their winners. But I feel like it's so important to talk about the other side. Like, obviously, it's glorious when things are working. We know how to win. You guys have experienced it. We've had a lot of winning trades. We know how to have successful trades. We know what a good trade looks like. But sometimes even the very best trades we take lose. And I really think that's a huge point. Like, we need to let trades hit their stop losses. Just let it happen. Move on to the next one. I'll tell you, I had a personal trade that lost yesterday. It was dumb. I made a rookie mistake. It was yesterday. Um, I was trying to buy the dollar yen at a supply zone. It was actually this right here. I'll show you. It was a nice area, actually. And in hindsight, I'm kind of mad that I didn't stay with it. But I don't want to keep telling myself that, because the the thing is, I would much rather, I'm at a point in my life, and I think it's a little bit more mature at this point, to say like, hey, I'm gonna hold this trade out up until my strategy says I can't hold anymore, right? So you look at, here we go. I'm going to pull up the dollar yen here in just a second. Here's the euro dollar. Here's the dollar yen. Okay, so this is it right here. So let me delete all this stuff. So before this news, CPI and then the rate statement today, the dollar yen looked pretty spicy to me. I was pretty excited about it. I was on a 15-minute chart. Let me show you here. So this didn't exist yet, the big down move, but I had a feeling the market was going to come down before it goes back up. And that's exactly what happened. But I was looking at, okay, back here was the last point of structure. You had several different structure points, right? You had this guy, that resistance right there, pretty obvious. You even had a resistance right here. And the market just kind of blew through both of those levels. So what is the thing that caused the market to break those levels? And actually you have another one right here. Right here. Nice resistance level, and the market busted through it. So I saw this and I said, okay, well, there's a couple of areas of interest. I said, okay, great. Well, this is a order block right here. Basically, that whole thing is an order block. And then you have another order block that's right here, specifically this guy. Whatever happened here caused the break of structure, and then move to the next supply zone. And then you had this order block that caused this break of structure. So then I looked at this and I said, whatever happened here and here, if the market dips into these areas, we're going to get a really good trade, back to the upside. And sure enough, if you come over, that basically happened. Like, the market came in here, it actually blew past this first zone, and look what happened. It dipped this huge move down. It tapped into this and then went up. But unfortunately, I don't know why I didn't place a trade here that night. This was 2 nights ago. I guess I forgot to place the trade right here. I only placed this first one and I stopped out, right? But I don't think it's worth, how do I put it this way, guys? I don't think it's worth compromising your rules to say, man, I should have, next time I'm just going to widen that stop loss. Next time I'm just going to, because I could have won on that trade. I don't think it's worth doing that, guys. I think you got to stick with what you know, stick with the methods that you have, because not every trade's going to work like that. Some trades, like, what if this market had just kept going down? Obviously, it would have been great to stop out, right? So I'm just going to accept what the market gave me on this trade, and I'm going to own it. And then realize, okay, next time I should have had another trade ready to go, because I could have made up all that loss and some on that right there. And it was a good area. You go back here, you can see, yep, that is the last little area before this little break of structure right here. So that's a demand area, and this was a demand area. Unfortunately, it did not hold, and that's going to happen, and we just need to be okay with that. And realize it's the same thing. Like, if you were to play basketball, you're not going to make every single 3-pointer that you shoot, right? But if you make a certain percentage that's acceptable to the team that you're playing on, if an opportunity is around, they want you to shoot that three because they trust you to do it, right? And that's the same thing with the strategy is, hey, I'm not going to make every single three-pointer that I shoot. I'm not. But all I need to do is make a certain percentage, and I'm worth being on this team. I'm worth, I'm going to help us win games and things like that. And that's what I'm trying to advertise, and that's what I'm trying to preach here. Um, um, that's why I'm telling you this is, hey, this supply zone didn't work, this first one, but this one did, or this demand zone didn't, but this one did. And that's all you need. You just need that, that this one alone would have covered, that's 93 pips, guys. You would have lost, and this doesn't happen very often, but you would have lost like 37 pips on that one. But then you make money on this next guy and you're golden, right? Do you know why Steph Curry shoots so many threes? I think he shoots that many threes because there aren't any. I like it. Oh, you got it. It's a joke. I like that. But yeah, he's an example too of I mean, he doesn't make every single three shoots, right? Or nor does any NBA player, right? I just think it's funny when they shoot air balls. I'm totally that guy that would yell air ball if they hit an air ball. Oh man, that's good. But yeah, so I think we're on the same page, guys. We need to hold strong to like our strategies and what we know. We really do. Like we know what we have works over the long term, so we got to stick with it. I don't know about you guys, but when I was new to trading, and I did this for years, I was jumping from one thing to the next thing to the next thing to the next. And right now, I trade a lot of the same things, but I add to that. Like, I've been on this huge stint with order blocks and trying to help you guys and help myself use these order blocks. And so far, it's been a really huge help with our trading. We've had way better trades, way lower risk when we do that. I add things to what we already know. That's all I'm doing. But completely changing our risk management up for something different, it's just an endless cycle. And I don't want you guys to have to go through that longer than you have to, right? So, all right, guys, it was a good day. We'll try to get some more trades out. I'll look and see what we can trade tonight. Real quick thing, there is a lot of news. I do want you guys to just take a look at this before we go. If you look at this news lineup here, it's a lot. So we had FOMC today, but look at tomorrow, right? We have Frank policy statement, right? Rate statement. You got rate statement on the pound in the morning. Euro. We might have, I don't know. I actually don't know what we're going to trade for the bankers close tomorrow. I'm trying to figure that out because the Frank might be less affected. Plus it's an earlier news event. There's a press conference with the euro. Do they have their own rate statement though? Yeah, they're raising their rates tomorrow too with the pound. And I'll have to see, depending on how affected the market is by what's released. If you see a huge move from the pound or the euro in the morning, I might have to pick something else out for the banker's close, like come up with a different pair completely, which we can do, but I'm just letting you know beforehand. All right, guys. Well, I appreciate your attendance. Thank you for coming. Enjoy the rest of your evening, and we will see you guys tomorrow. Thanks for coming.